Good morning, everybody, and welcome to episode 3 of Deal Makers from Crystal Specialist Finance. During this series of webinars, we aim to take a deeper dive into some more deal specifics and hopefully give you some steer on how lenders will be looking at the deals that land on their desks. Now, these sessions work really well, and they've already led to some business being written as a result of these. So please utilize the Q&A button that should be at the bottom of your screen, and we'll do our best today to cover any specific questions that you have. We have a packed session for the next hour, but don't worry, any questions that we don't get around to, we will pick up offline and feed back to you individually. The questions we get in from you guys are key, but also the experts we get to answer them are critical as well. So today I'm delighted to be joined by 3 commercial mortgage experts. We have Simon Ward from InterBay, Matt Taylor from Shawbrook, and Crystal's very own Joe Breeden. Welcome, gentlemen.
Morning.
Morning.
Good morning.
And for regular viewers of the series 2, you'll notice that I managed to squeeze a haircut in between the last 2 episodes. Who knows, hopefully next time we'll be able to get around the same table and do one of these as well. So to set the scene to start with then, Simon, we'll start with you. Just how busy are you seeing the commercial finance market at present, and what type of deals are you guys completing?
Firstly, can I say good morning to everybody? I hope everybody on the call is safe and well. I'm looking forward to the event. Thank you guys for the invite, and hope it's had some value today for everybody on the call. From a personal point of view, the marketplace is very busy at the moment. There are a lot of really good inquiries, some really good deals out there to be placed. I know that won't be necessarily all with InterBay, but we are seeing a lot of really good deals with a lot of lenders with differing criteria. So the ability to place the majority of deals is there, which is good. At InterBay at the moment, we're working a lot with some really good commercial and semi-commercial deals. The volume's increased a lot. I'd say at least over the last sort of 6 to 8 weeks, we've seen a marked increase in volume. Whether it be standalone commercial deals, semi-commercial, which some people would class as mixed commercial, which has got an element of residential with it, or something more complex, there's plenty keeping us busy at the moment, to be honest, Chris.
Excellent. Good to hear. And Matt, same question to you.
Yeah, thank you. Morning all. Yeah, again, thanks for the invite, and look forward to the session. So yeah, Shawbrook very busy. I think partly due to the reduced appetite that we've seen from some commercial lenders during the last 12 months. We've been very pleasantly surprised with the deal flow and the appetite of investors to continue to purchase and refinance the commercial assets. I think we've all seen the articles in the press regarding the new normal. Will work habits change, working from home? We're seeing the evolution of the high street, and certain industry commentators suggesting that the high street will be more of a sort of social place. So we're seeing experienced landlords buy up commercial assets because they're seeing not only opportunity now, but moving forward in the future.
Excellent. And Joe, same to you. How busy are you seeing the market from a Crystal viewpoint? I think you're still on mute for a sec there, Joe.
Hugely grateful for the opportunity that our investor and broker partners have given us this year so far. I think the commercial market is one of opportunity. It seems that property investors are looking to diversify their portfolios a lot more in the last 6 months than they probably ever have been. And I think there's some great value acquisitions out in the marketplace. Looking at our data, we're 25% up on commercial investment year to date than we were in 2019. So it's huge commercial investment. We're feeling the ripple effects of the high streets reduced appetite, and that's sort of cascading down into the challenger bank and the specialist market. We've seen a lot of commercial investment opportunities, mixed portfolio refinances. That seems to be a biggie for us right now, and of course holiday lets. That's an absolute booming market, and something that I thought would have dried up, but it just seems like every week that our data shows that we're getting compounded increasing levels of inquiries for that sector. So it's a great market to be in. I think I've talked to the guys on this call previously outside of the session today about how great the opportunities are out in there, and the type of deals we're seeing in the commercial market space. A year ago, I just absolutely categorically would have thought that we'd be dealing with a horrible market and a horrible deal type, but we're really seeing some lovely deals, and we'll talk more about those later on. So great market to be in.
Excellent. Thank you for that. So Matt, starting with you for this one then, what commercial finance aspirations does Shawbrook have during this coming year?
Aspiration, I suppose the short answer is more of the same. Shawbrook, we continue to lend throughout the pandemic, throughout the whole of 2020. In some instances, up to 75% loan to value for the right customer and the right asset type as well. As Joe mentioned, we believe there's a clear rationale for an experienced landlord to continue to invest in the commercial property market. There's still the potential for growth there. We believe if you purchasing and obtaining versatile assets, then there should be demand for appropriate tenants. And ultimately, if you've got FRI leases in place where there's responsibility on the tenant for maintenance and repair, they can be less management intensive than residential portfolios as well. So I think the key word that Joe and Simon have already mentioned is opportunity and diversification, and that's where we're seeing our investors head.
Excellent. And Simon, InterBay's aspirations for this year?
Yeah, I think we're keen to watch the market and deploy the right products and criteria and target sectors of the market at the right time. Is the honest. We'll look to support our brokers and their investors as we navigate, hopefully, out of the pandemic. Fingers crossed. There's absolutely appetite to grow, innovate, write deals. But we need to be prudent and need to do it right and at the right time. So already this year, we've made a vast amount of changes to our criteria, acceptable asset classes. We've lowered rates on semi-commercial and commercial, and this includes a semi-commercial rate through Crystal. We've increased LTVs. We've looked at how we can utilise commercial income, things like that. But just be rest assured, we'll be looking to support the market in the right way possible. And this will be at the right time, obviously. Example of that, recently, we've just launched a holiday let proposition that really isn't commercial, so I won't cover too much on that today, but it's certainly worth talking to Crystal and myself about the options in that area as well, and just looking to demonstrate, we're looking to introduce things at the right time where we feel there's an appetite there.
Excellent. And Joe, why should the viewers today consider using Crystal and your team for their commercial cases?
Yeah, I mean, I always like to use the analogy that, why play one golf club, i.e. one lender, when you've got the full kit bag with ourselves, a whole of market offering, combined with our semi-exclusive product range, I think gives us a pretty decent go out for any sort of commercial case. I think we understand lender appetite. I think we've got our finger on the pulse in terms of investor appetite as well. Investor demand and where that fits. I mean, you wouldn't be doing a nightclub today, but you might be doing a nightclub in 2 months' time. You do a pub today, you probably wouldn't have done it a month ago. All these things, it's an ever-changing market, and we're sort of best placed, in my opinion, to have that overview. And almost about the right outcome for the right customer at the right time. So, Crystal and any other the specialist distributors out in the marketplace, I think are really well placed to offer the best outcome and advice for your customers, and that's what we're all here for, right?
Yeah, very good point. So Simon, some lenders have got a very rigid approach to asset types. You've just touched on there that you're looking to change the sector and diversify your approach as the year goes on. What kind of properties do you most want, or I suppose most importantly, which ones do you not want at the moment?
I think in the commercial space, it's fair to say we're a little more cautious in regards to the acceptable security, and it is very different in the sort of semi-commercial space. Our preferred security would include your sort of light industrial, your warehouse, distribution centres, smaller office blocks, as well as some selected retail. For example, your takeaways, your convenience stores, which have performed well throughout the pandemic. The key thing is that being said, we're really focusing on the track record and sustainability of the rental income, along with the applicant's experience and the quality of the asset. So that gives us a great opportunity to sort of talk through various types of deals. At InterBay, we can engage with our underwriters and our in-house surveyors pre-IP. So that allows us to gauge an appetite and have a look at to support some assets maybe where other lenders would struggle or would be outside of the standard criteria. With semi-commercial, mixed commercial, a track record of the rental property ownership sort of key consideration, if I'm honest, for our semi-commercial offering. As long as there's one commercial lease and one AST, you can have multiple of each, whether it's multiple commercial, multiple resi types. We don't have a split by value limit like some other lenders do. So some lenders will not allow a resi or commercial element to be above 60%. We're very different. So whether it's a bookshop downstairs with a 2-bedroom flat upstairs, or a hairdresser downstairs with a HMO, it's something we're happy to consider. It's well worth talking through with the likes of myself, obviously Matt on a call as well, and of course Joe and his team. We look at all sorts of available for sort of investment and owner occupier as well, so definitely worth the conversations with us, without a doubt.
Thank you. And Matt, open that one up to you.
Yeah, so it's certainly not a rigid approach at Shawbrook. I think from our perspective, it's clear we've got some criteria. We've got some certain types of assets that we wouldn't consider. We publish those, and obviously the team at Crystal are fully aware. But it tends to be, think of versatile assets. So if you've got a retail unit, if you've got an office block, where it could be a hairdresser, or it could be a restaurant, or a takeaway, or as Simon says, a bookshop. It's all about that. What will the alternative use be for that property? What would be the exit? And from an investor's point of view, we would certainly anticipate that's what they'd be looking at as well if the market were to change. But in terms of asset types, I mean, we have a minimum loan of £50,000. We go right the way up to 25 million. So from our perspective, it could literally be a small retail unit, a small industrial unit, right the way up to a portfolio of multi-floor offices in prime London. We're very versatile, but we're keen to have some boundaries there, and obviously communicate to broker partners such as Crystal where our sort of limitations lie. But generally, versatile asset, we're happy to proceed.
Excellent. And Joe, a little bit more quirky for you then. What's the most unusual type of security that you've seen at Crystal, say in the last 12 months?
Yeah, I mean, I think the one that we can be sort of proudest about in terms of unusuality this year is we did a drag bar in Liverpool, semi-com drag bar during the middle of this third lockdown. We relied on some top slicing income, relied on the rental income and the flats above. But that's unfortunately that business, owner occupied business, had been on and off throughout the last 12 months. So accounts are really poor. Really lovely client. We're really keen to help them move away from an existing banking relationship. Who'd put some pressure on them to do so, and that was a real feel-good factor for everyone involved here. So that's quite an interesting one. I also think we've got a current deal on a deal that's currently on the books where we've had an industrial business that's pivoted and got into hand gels that are have got anti-bac-in that instantly kills coronavirus. It should be a sort of high street deal all day. They should have been backed by some government funding, just missed out on that. They've got a big government contract, and unfortunately we've managed to replace that with a different high street lender, so one that they had a bank relationship for 20 years. So that's an interesting one, and we're obviously helping with the pandemic by supporting that application as well. So there's lots of weird and wonderful things last 12 months. I'm really quite intrigued by this the industrial warehousing growth in demand that we're sort of seeing. So since the likes of Amazon and the distribution centres have been relied upon an increasing level over the last 12 months, investor demand is looking to acquire, build out, lease out, convert more and more of these industrial warehousing units and logistics units, and there's a lot of lending appetite for those sectors as well. So that's something that we've definitely seen, and it has been quite interesting because it fits in with sort of what's happened on a macroeconomic level over the last 12 months on the way retail's changed.
Okay, excellent. So I think the key takeaway from that from all of you then really is let's have a conversation. Let's have a look at the deal. Let's get to understand who the borrower is, what the asset type is, what the experience, what the whole picture of that deal looks like. And there's generally something there that can be structured to assist. Brilliant.
Yeah,
it sets us up nicely for the questions that are coming in. We've had some questions sent in advance. We're getting some good questions put through on the Q&A and on the chat at the moment. So please, by all means, keep those coming through. We'll look at addressing as many of these as we can. So starting off then, Simon, I'll start off with you on this one. So Anthony from Mortgage Wise up in Scotland has asked, What's the minimum loan available via InterBay? And also, what's your minimum property valuation?
Okay, great question. Thank you, Anthony. From a commercial case submitted via Crystal, our minimum loan size is 100,000, where your standard criteria direct to InterBay would be 150. It is worth noting that we can do multiple securities on one application, so that we have actually no minimum property value, but our minimum loan via Crystal on semi-commercial is 100,000. As standard, it's 150,000. When you move to commercial, minimum loan is 150,000. But as I say, you can do multiple of the same asset on an application. So give you an example, I have three commercial properties all worth 100,000 each. Technically, individually, they don't fit, but we submit that in as one application, got 300,000 in asset, we can easily pass the minimum loan.
Very good, thank you. Matt, how about Shawbrook?
Yeah, our minimum loan is 50,000. So yeah, generally we're seeking a minimum asset value of around 75k, but again, it will be subject to valuer's comments more than anything. If the value is confirmed that there's a demand for the property, both on a purchase basis and on a reletting basis, then we're happy to assist. But key is hitting that 50k minimum, and we lend in England, Wales, and Scotland as well on the commercial side.
Excellent. Any restrictions in Scotland?
So again, it will depend on the areas that we're looking at, depending on value of commentary and demands. In Scotland, we do have some concentration where we've done a lot of lending in the past and been successful. So again, it's always worth speaking to the guys at Crystal, and then obviously you'll get in touch with myself. But generally, we're happy as long as there's demand. It's not too remote. Is another point as well.
Thank you. Simon, just to follow on from that, have InterBay got any restrictions geographically?
Yeah, so England and Wales only for InterBay. We don't lend in Scotland currently.
Okay, thank you. We've had another one in. So Matt, I think I'll start with you with this one. An advanced question is coming from another Matt, actually, Matthew. A client with a large mixed portfolio. There's a number of standard units in there, but there are some vacant units, some short leases, etc., mixed in with that portfolio. Is that something that you're able to assist with?
Yeah, absolutely. I think the key is, again, understanding the client's background, what the strategies for getting the properties relet, and what the longer term plan for the asset is. But if you've got an experienced commercial landlord, we're more than comfortable with some vacant units. Clearly, we need to make sure that the client's got the ability to service the debt based on the leases that are in place. But strategy is key. We're happy with sort of shorter term leases and licenses as well. So we offer a lot of flexibility on that point, and we lend against the vacant possession value. I won't go into valuation methodology at this point, but yeah, given that we lend against that vacant possession value, we're positioned to assist and help.
Excellent, thank you. Simon, one for you. This is coming from Dale, an AR of Sesame. Dale's got a customer whose commercial property is held in his pension scheme. What are his options with that?
So InterBay more than happy to consider lending to SIPs and SASs, so your self-invested pension, personal pension, or your small self-administered schemes. Standard commercial products, we can lend up to 50% LTV. We can potentially do more on exception as long as the deal does not exceed 50% of the fund value. And it's certainly worth noting that the minimum loan requirements remain at 150,000 for commercial, even if it's held in a pension fund. A lot of lenders will hire that up and have a lot higher minimum. With InterBay, it's part of the standard.
Thank you, Joe. Anything to add to any of those?
No, I just think minimum loan amount is something that we hear about daily. We wish that both you guys would drop the minimum loan amount, because we do seem to be getting a lot of 30, 40, 50 granders that we restricted option numbers. But I understand why you don't want to deal with the smaller deals. And SIPs and SASs, it makes so much sense for guys to buy units in those corporate structures. So yeah, it's great that you both have got appetite to support those.
Excellent, thank you. So just following on from that, we've talked about minimum loan. Where are you with maximum loans, Simon?
Okay, so officially we have no maximum. What would happen is if a deal comes in that's over £2 million, we'll take it to our transactional credit committee. which is the board of directors. So I'd work with the broker to present a paper. They sit on a Wednesday and a Friday every week. Papers have to be in for the day before, but I'll work with the broker. We'll initially, as we talked about before, we'll engage with underwriting, we'll engage with our internal valuers to make sure that there's appetite there, build the case together and take it to credit committee. I've had some really big deals that we've taken recently. One at 16.8 million that we've literally just put into credit now, which is due to go in. That'll be presented tomorrow. So there is really no minimum there, no maximum there.
Okay, good to hear. Thank you, Matt.
Yeah, the soft limit is 25 million, but again, we've got the capacity to increase. Very similar to InterBay, we've got as we call it, a CDF, a complex deal forum that will consist of managing director, head of underwriting, sales director, myself would be on there as well, and we present the merits of the case, ensure that there's appetite within the bank. We'd iron out any creases that are potentially within the deal, and obviously work closely with Crystal to make sure that we're positioned with all the information up front to give a sort of really clear green light to move forward, progress the case, and ultimately commit client fees, which is the next step to approval, of course. So yeah, we've seen some fairly large details. We're quite vocal in the press about the large deals that we've done. But again, from our perspective, it's just about what's the client got, what do they want to do, what's the plan, and where do they want to be. The other thing that's worth noting as well, it isn't necessarily with the bank about that one transaction. So it may be that a client wants to buy a property for a fairly modest amount, a few $100,000, but they actually want to grow a portfolio quite quickly. We can also sort of go into that credit committee with what we call, and come out with what we call an appetite statement to say, look, all things being equal, we've assessed the client, this is where we're at, and this is what we would prepared to offer the client moving forward as and when they find suitable assets they want to purchase to grow the portfolio.
Excellent. And I know we've used that a number of times for a couple of clients as well. So that's a facility that works really well. So yeah, thank you for that, gents. We're getting a few questions coming in live as well. So keep those questions coming in. Thank you. Mohammed has said he's got a client who has residential landlord experience, but no commercial property experience. He'd like to purchase an industrial unit for investment. What kind of thing would be available for him on that basis? So Matt, I'll start with you with that one. How do you think that one? How would you look at that?
Yeah, absolutely. I think we've got a client there that can demonstrate they understand their obligation as a landlord because they've got the residential portfolio. It doesn't quite say, but I would expect that they would have a mortgage payment history there as well, so they can show their obligation towards mortgage debt and meeting mortgage repayments. We'd expect it to be a lease to be in place. So again, with it being a first-time commercial investment, we probably wouldn't look to take on a vacant unit at that point. But if there was a lease in place, or there was a lease in place at completion, understand the client's strategy for managing the property. They got a letting agent, for example, they live close to the property. Will there be an FRI lease in place at completion? Certainly one we'd be looking to proceed with. And as I say, for us, it's that sort of natural progression, if you like. We see an awful lot of clients that started out with residential, whether it be single residential, HMO, student let, and then diversifying into that commercial arena. Great,
thank you, Simon. Point that one to you.
Yeah, it's a difficult one without seeing the actual case itself. The one thing I wouldn't want to ever do, and you'll find when you speak to me that I don't like saying no. It's not something that I like doing. As standard, we want 2 years experience for InterBay for commercial products. Semi-commercial is a little different because we consider the buy-to-let experience in there. But I'd like to know more about the deal, if I'm honest with you, rather than just say it's outside of criteria. At InterBay, we give our underwriters the ability to make a decision on the right cases. So they don't fit the usual box, the usual criteria, but the deal makes sense. Let's have a go, no problem. I'd like to think we're a lender that you can chat to. We can chat cases through. So I'm on the phone with Joe and his team regularly about things that just maybe don't sit inside the usual box. Would give the cases the attention they deserved. Now, I don't win them all, and I'm not going to sit here, I do, but I'll give them a damn good go.
Yeah, brilliant. And I think
that's key. It just comes down to common sense, doesn't it? So, just as Matt's illustrated, just as Simon's illustrated, we like to work with lenders that don't say no, say how, and they try and make a deal work. And I think obviously we need a bit more meat on the bones in this example, but it's absolutely one we can help with. And you're looking up to a maximum 75% across our, our panel lenders on this. So great question, Mohammed. It's just about, filling in the gaps, and let's put that common sense to good use and build a picture, to get some lender appetite.
Brilliant. There you go, Mohammed. Thank you for that. So Rob has asked, he's got a client who's looking to purchase a property with a takeaway on the ground floor and 2 1-bed flats above. So what LTV would you be looking at for something like that? So Simon, do you want to start us off with that one?
Classic semi-commercial deal we see every day. It would be, we consider up to 70% LTV. Rates start at 4.79, and I think this is one for the Crystal exclusive. What do you reckon, Joe? Definitely,
mate. Definitely. There we go.
Thank you, Matt.
Yeah, absolutely. Again, bread and butter deal for us. It's probably one that we compete with InterBay for on deals. It's probably a pretty standard deal that we both love to do. Look, as I say, we've got the ability to go up to 75% if the client's got the right background, if there's suitable demand and commentary. Depends on the split between the takeaway and the residential income as well. So again, this is all stuff that Crystal understands and have an intimate knowledge about what Shawbrook's appetite is. But because it's straight to the chase, if we were to go to 75%, you're looking at 584 on a 5-year fixed rate on semi-commercial at the moment.
So it's gearing over price basically with the 2 guys in the front.
And that's the way I'd probably see. Yeah,
it's right.
The options. What do you want? Sort of mystify it really. What's most important?
Yeah, agreed.
Yeah, perfect. Thank you. And for some of the more residential brokers that are attending, a flat above a takeaway is probably a security that they might struggle with a little bit more. Is that something that is commonplace for you guys, Matt?
Yeah, very. It's that line that I hate pulling out, but it's subject to value as comment. So that old chestnut. So yeah, look. In all seriousness, look, a valuer will be able to see the rationale and the demand on an investment basis. But what we're looking for, what's the demand on the open market, or is it going to be actually quite a restrictive asset that only an investor is going to be able to buy? That will then be reflected in the valuation. And depending on how sort of severe, I suppose, the comments are, would ultimately influence. But yeah, we do lend, as Crystal know, adjacent to commercial, above commercial. It will all just depend on the valuer's commentary of the area and the demand for property in that area.
Excellent. Simon, anything more to add on that?
No, Matt's absolutely hit a plumb on the head. I couldn't have explained it better myself, and it's exactly the same approach with InterBay.
Perfect. Thank you. So Dee has sent a question in saying, my client owns an unencumbered property where the travel agent has closed on the ground floor, but the rent is still coming in from the four flats above. 400k estimated valuation. What kind of figures could he be looking to borrow against something like that? Simon, we'll start with you with that one.
Nice, really good question. Thank you for that, Dee. And really one that we see a lot in these times. We see a lot of really strong inquiries where the business operating downstairs has shut the doors to customers temporarily in line with government guidance. Okay, so they're considered non-essential retail, if you like. This has resulted either in a rental break being negotiated with the landlord or perhaps a reduced rental. In this instance, we're more than happy to utilise the income from the flats above and look at those to see if the deal works. We can proceed with a loan up to 70% LTV, so that would be 280 in this case. Another one for that semi-exclusive, I think, though, Joe?
Yes, mate.
I think it's worth noting we can't do vacant downstairs. Okay, so if it's vacant downstairs, that would actually be out. So there's nobody downstairs, that would be outside of InterBay's criteria. If there is a business in there and it's closed the doors for whatever reason, that fits criteria. Vacant is different for InterBay, so it's just worth noting that.
Very interesting, thank you. Matt?
Again, another one that we'd be more than happy to proceed with. Loan to value wise, I would suggest we'd be more sitting at 65%. That would be our sweet spot on this type of deal. Rationale being, if we've got a vacant or closed commercial tenant downstairs, we want to just sort of slightly curb the appetite until we understood, what's the strategy for reletting? Will there be a new tenant in place, etc. But we could base it on the residential income. So the client will be servicing the debt, and we base our interest coverage based on the residential income that is being produced. We'd also want to find out the rationale for the capital raise as well, of course. So yeah, a really good example of, you know, Crystal being able to sort of grab a property, a sort of inquiry, and then say, right, we've got a couple of different lenders that can help you, coming out with a pretty similar outcome, but just, you know, specific, you know, the lender will be selected specifically based on the client's circumstances.
Excellent. Joe, anything more to add to that one?
Yeah, and again, if gearing is what really matters, and as Matt says, as long as it makes sense, the use of funds and the purpose of the funds, I think, you know, the fact there's 4 flats there, you know, the rent, you know, should be circa, you know, above £600 a month. So you sort of imagine that the rental coverage is sufficient there to raise up to 75% of those, of the value of those 4 flats as well. So if gearing is what you need, you know, we can look at that. Gearing versus pricing, obviously, the price will be up more like 5 to 6%. So you know, there's multiple options there.
Had a few coming in live as well, so again, keep these questions coming in. What's the appetite like for retail at present? Matt, do you want to start us off with that one?
Yeah, good. We're at 65% is our sweet spot. As I said, we've got the ability to go to 75 depending on what it is. So again, if it was a pharmacy, if it was a convenience store that's had phenomenal sort of traction and trading, being able to stay open. Yeah, I suppose if it's going to be a restaurant, if it's going to be a hairdresser, something like that's maybe had to close, as Simon says, in line with government guidelines, and we're probably more inclined to be around the 65% mark. But look, we certainly haven't excluded sectors and sort of made some wholesale sort of cuts, if you like, to our criteria. So still very much happy to support retail.
Thank you, Simon.
Yeah, retail for us, you're probably looking at more the track record of the asset and the individual. Officially, our line is we'll do convenience stores, we'll look at takeaways, things that have performed within the pandemic. I had one recently, which was a butcher shop, which had been there for sort of 25 years, traded, looking to raise money. He'd had a shop, he'd running his shop 6 days a week, queue outside the door and down the street. I basically run this. The deal made sense. He was looking to basically raise money to go and get his next commercial in the next village along and open out his empire. So I think for us, although the standard criteria would say convenience stores, takeaways, I think high street wise, it's really about the asset and the performance and the individual. And again, it's definitely worth talking to Joe and the team, who will in turn speak with myself and underwriters, and let's have a good go at the deals.
Yeah, I'll probably just add to what the guys are sort of saying. You know, we're definitely seeing, you know, the better retail deals are in secondary locations, so not your prime city centre sort of locations. It's where there's a community aspect. So Simon alluded then with the butcher, you know, they've tried to trade, maybe they've pivoted throughout, you know, the last 12 months. Accounts are still strong. You know, we're seeing a lot of secondary location retail doing very well, and have actually done probably even better result of the last 12 months, where there's been a reluctance for an individual to travel, you know, a certain distance from their home. So, you know, I think there's great opportunities within the retail space, you know, but it's very much deal by deal, and it's, you know, we've got to piece it together, paint the picture.
Yeah, very interesting. Thank you, gents. We've had a question in from Gareth. What are the current restrictions when looking at owner-occupied deals where the client has taken a C-bills? Simon, do you want to take that one first?
Yeah, perfect question. Another one that we see a lot of, C-bills, your business bounce back loans. It's not outside of criteria, but again, it's about understanding the deal, understanding why the loan was taken, and the reason for it. It can't be used as a deposit, because that's really not what the schemes would put there to do. So it's understanding the deal, not outside of criteria. It's something that obviously I'll chat through with Joe and his team, or the broker directly, no problem, and we'll get our underwriters comfortable. As I said before, our underwriters have the ability to make decisions on deals, and this is something where we need to understand the deal. We need to understand why that was taken. If it was taken as a precautionary measure, which we've seen a lot, whereas accountants have said, you know, the business should take this as and keep in reserve. again, that's acceptable to us as long as we're understanding the deal. The last thing we want is to be putting more debt onto a business which has been struggling and they've taken a loan basically because the business is struggling. So it's about understanding the deal. So my answer to that is it's not a no, it's not a yes. We need to understand the deal and let's move forward.
Good answer, thank you. Matt?
Yeah, so obviously, as you guys are aware, at Shawbrook, we've been focusing on commercial investments. So again, not necessarily sort of seeing an awful lot of that owner-occupied stuff. However, you know, a lot of commercial landlords do have their own businesses, will have taken advantage of government support. We can probably throw payment holidays into the mix as well as a sort of similar vein, really. It's that government support during the pandemic. I think Simon's hit the nail on the head. It's establishing, was it taken as a result of distress or was it taken as a precautionary measure? Because let's face it, last March, last April, none of us knew what was going to happen. We didn't know where we were going to be. And again, if people have taken, you know, as I say, the support that's available to them, that's okay from our perspective. We just need to make sure that it wasn't taken because they were in financial distress. And as Simon said, it wouldn't be prudent for us to increase borrowing if a business was showing signs of distress.
Thank you. Joe, anything to add to that?
Yeah, no, I think it's just a really key point. You know, whilst there does seem to be you know, it's well documented there's a surplus in cash reserves floating around the economy, there is also an increase in business debt. So getting your head around the business debt, the reasons for the change over the last couple of years of that business debt level, and justifying that to your packager or your lending partner is absolutely key. So it doesn't just cover C-bills, bounce back loans, holiday payments. It's just understanding where the net debt change position over the last 2 years and justifying that.
There you go, Gareth. Hopefully that covers your question there. So Stuart's put on a specific question here. An experienced client who owns a number of semi-commercial properties in the Southwest region. He now wants to purchase an office space in the same area, which is occupied by a law firm. They've been a long-term tenant and they're to remain on a new 5-year lease with a 3-year break. Valuation is circa 550. What appetite do the panel have and what kind of rates would we be looking at? So Simon, do you want to take that one?
Yeah, of course. So we would consider up to 65% LTV. That is the key here is that the customer has a commercial experience. Even though it's semi-commercial, there's still experience there of owning a commercial and letting a commercial. So that fits the criteria. From a rate proposition point of view, at 65%, it's 6.04 at the moment, but we would go to 65%, and it certainly sounds like a deal that should be into Joe and the guys, because if we won't do it, which we will, you might get a deal with Matt or whoever, and it's definitely one that can be done. Certainly something that should come in.
Brilliant, thank you. Matt?
Yeah, again, happy to proceed. Looks like we've got an experienced client. Again, there's some diversification there. They've clearly done the background on the tenants as well. And the new 5-year lease would give us confidence as well. So yeah, again, with it being a purchase, obviously subject to full underwrite, we can look up to 75% on that basis. And you're looking at 6.44 with ourselves, but again, getting right up there on the gearing. If we drop down to 65%, you're looking at a 594. I think one key thing as well that potentially myself and Simon have both missed out as well with the sort of challenger lenders, non-high street, obviously were interest only as well. So again, you know, if we look back sort of pre-pandemic and rates with high streets were lower, just bear in mind that isn't always the correct solution for the client. If they want that cash flow, if they want the ability to service the debt on an interest only basis, with the ability to overpay, of course, if they want to clear down capital at their leisure, then we're certainly an option on that side as well.
Very good point. Thank you. Joe?
Yeah, great points. Again, you know, I was going to say up to 75%. It seems like a fantastic deal that you're looking at anywhere but 6 to 7%, you know, rate wise, interest only, repayment, you know, subject to the age of the individual. Yeah, you know, experience and inexperience we can deal with. So bread and butter, I'd imagine, for everyone involved.
There you go, Stuart. Thank you for that. It looks like everyone on the panel will take that one. So feel free to send that one in. Is there another one that's just popped up there? Any appetite from anyone for desktops or AVMs? I think, Matt, I'll point this one at you.
On residential property, yeah. So on residential property, we can certainly look to assist with AVMs. It does have to meet certain criteria, but yeah, more than happy. So again, look, where we've, again, straining to residential lending, I suppose, to a point. However, I suppose large portfolios will have elements of residential property within them and commercial property. So look, we can look at utilising AVMs, and we certainly will do where we can. It'll save the client's cost. There's obviously a speed aspect as well, more than comfortable. In terms of the desktop element, again, we won't go into the specifics of the case, but obviously Crystal have got a deal with us at the moment where it's a rather large asset size. It's a hefty valuation for the full inspection. So actually what we've been able to do is reach out to a trusted valuer on panel and say, look, can you give this a desktop for us so that we can understand where this one is going to sit, subject to full inspection, making some assumptions, and then we can take that into our credit committee, make sure they're happy to proceed. And then obviously if the deal works for all parties, then we can progress forward and execute the full valuation in due course. So that's just an example of how we can utilise our valuer partners to come up with the right outcomes for the clients.
Brilliant, thank you. I think the answer to that is certain lenders will look at desktops and AVMs for buy-to-let properties or portfolios, but I don't think anyone's really that interested in them on a commercial basis.
We could probably do a drive-by. Probably, depending on the LTV, we've probably got a lender on panel that would look at a drive-by. But again, it's risk versus reward. So what they're going to get out of it. If it's only geared deal, yes, it makes sense. But if you're off for max gearing, there's no other marketplace. They want a full-on inspection.
Great, thank you.
I think just another point on that as well, Chris. Sorry, that obviously as strategic partners, Crystal are able to contact and liaise direct with our valuer panel managers as well, so that you can get a choice evaluation. So it's not just a case of Shawbrook saying, look, that's your fee, Mr. Client, like it or lump it. Crystal will obviously reach out to our panel managers and say, look, can we have some options for the clients? Can we make sure that we're getting a fair price for said client and the right assets as well?
Great,
Yeah,
thank you.
Good point.
We've had another question in from Jaya. Keep your questions coming in. Thank you for all of these. So Jaya said he's got a client with a large residential buy-to-let property that he's looking to convert and remortgage into holiday usage or Airbnb usage. I suppose this comes into that crossover between commercial and I suppose the more complex buy-to-let. So Simon, is that something that you guys would have a look at?
Potentially, we've just launched a holiday let proposition, which is mainly single units. However, we've recently, as of yesterday, we've been into credit committee and actually got different units. So one with multiple units on it approved. Again, it's down to the deal itself. I didn't catch the name of the broker there. Apologies.
Jaya.
Jaya.
Yeah.
So Jaya, I'll be speaking to the guys at Crystal. Certainly they'll bob that, or I'm happy to take this offline, no problems. We'll have a proper look at this deal for you. It is potentially something we can look at. We look on our holiday let proposition. You're looking at a maximum of 70% LTV, loans to $1 million. We can go higher than that on exception. So at the moment, it's a new product that we've literally launched 4 weeks ago. What I would say is, we go off, we will allow Airbnb, we will allow booking.com. Your applicant is actually allowed to occupy the property for 60 days a year as well. Within that, we look at the rentals actually done on a 30-week basis. So we'll do 10 weeks high season, 10 weeks mid-season, 10-week low season. So again, it's about understanding where it is. It needs to be in a holiday destination or in a city with a historical interest, let's say Chester or Bath or somewhere similar. I'm probably not going to do it if it's in the centre of Milton Keynes. No disrespect to Milton Keynes whatsoever, but I probably wouldn't go on holiday there. So it's about just understanding that. So if you want to take that up offline, please feel free. I'll happily chat that through with you, no problem whatsoever.
Excellent. Really detailed answer. Thank you for that. And hopefully we haven't offended the whole population of Milton Keynes.
I apologise. I like Milton Keynes. I apologise.
Thank you. Matt, anything to add to that?
Yeah, I think, again, obviously, look, InterBay have got the specific holiday let proposition. From our perspective, we can certainly look at holiday letting and short-term letting, so we can open that out into serviced accommodation and your Airbnb and booking.com scenarios. For us, it's more about saying, right, if that didn't work out, could we fall back on an AST basis? So we're going to make sure there are no planning restrictions. We're going to make sure that there is demand for ASTs. But above all else, we just want to make sure, look, what's the client strategy? So again, if it is Milton Keynes, for example, but actually there's a plant or up in sort of my neck of the woods, up in the Midlands, if, for example, there's a lot of sort of short-term letting goes on in and around the JLR plants. And historically, it's been around Birmingham Airport and what have you. So what's your strategy? Mr. Client, why do you feel going down that short-term letting basis will be more fruitful than going on an AST basis? But also, have you got the plan B and the backup of an AST? So it's about assessing it on an AST basis, but saying to the client, look, if we understand why you're doing it that way, then we can certainly consent.
Yeah. And I just would add as well that, we do have flexible lenders that are all for change of use. So if there's a classification change or, a constitution change within the business, we have got, bridge to let products available as well, with Shawbrook being one of them. InterBay were in both sides of the coin. I'm sure at some point they'll be back in the bridging market. It's something, again, we'll complete that sort of transaction weekly, where you maybe got a semi-com, it's in a decent demand residential area, so they're looking at taking the retail out and popping a couple of flats in there. So change of use isn't something to be scared of. It's just, as Matt rightly says, understand the journey, understand where the property is located, the rationale behind the decision making and appetite. We can build out the picture from there.
Excellent, thank you. And Joe has just added to that the property's in Oxford. So hopefully we tick some more of the boxes from there.
Right.
So, yeah, thank you for that. So we had a question in from Ron. So this is a deal that probably would have fit the high street 18 months ago. He's looking for a facility for a rugby club. He's looking to raise some funds on the premises that they already own, open trading accounts available, etc., with the ground value of about 3 million. The money's for refurbishment of the site. Is that something that either of you guys would have an appetite for? Simon?
Yeah, I mean, I'd want to know more about the deal. Probably want to see the accounts. What we're looking to do. To be honest with you, Ron, standard criteria is probably it's outside of the standard criteria, not probably what the standard would say. However, as I said before, I'm not somebody who likes saying no or like saying it's outside of criteria. I think for me, I'd want to understand it, understand exactly what they're looking to achieve from it, where we are, what we're doing with it, and things like that. I wouldn't say it's a no, but I'm leaning towards a no from an InterBay standard criteria point of view. I think this would be one that would be definitely for the likes of the team at Crystal, who would be speaking to their lender providers, because it's going to be very bespoke. It's not, you're not going to see these every day, and that's why I wouldn't want to say straightforward no, but I'd certainly have a look. I think this is probably one for your Crystal, you guys at Crystal, to be honest.
So I'll summarise that for him. It's a no from Simon and definitely a no from InterBay on that one.
Thank you.
Matt, any change to that?
No, I mean, look, despite our link up with Saracens Rugby Club recently and our sponsorship deal, unfortunately, it would be a no. The reason being, from my perspective, I don't believe the asset would be versatile enough for us. So it's going to be one for the guys. I'll sort of bear out to that one quite quickly.
Yeah, fair enough. Joe?
Yeah, I mean, yes, we do have a couple of options, but we need the whole picture painting, and it seems like a lot of money for a refurb of a rugby club. So we definitely need to understand why and why they're up against any sort of reputational risk for the the funder if it all went wrong, and we would need the strength of the accounts decided to earlier. But it would be a tough one, but we do have a couple of options.
Excellent. We did a deal back end of last year on a golf club in Bristol, where the client was purchasing for 2.5 million. And that we managed to get that through the high street lender. Good experience, good accounts, everything ticked the boxes, and it was there was a trading business element to it as well, rather than just reliant on the golf club income. So Ron, on that one, I think it's definitely worth sending it in. We'll have a look at it and see if we can piece something together and come back to you quite quickly with some options from there. So thank you for that. Another question here. I've had a couple of deals now downvalued by commercial valuers. Is there anything I need to be aware of? So Matt, you want to take that one first? How are you seeing the valuation market, I suppose, out there?
I think it's a mixed bag, if I'm honest with you. So it's very difficult to give sort of clear guidance. I certainly don't think that valuers or RICS indeed are sort of giving valuers guidance to knock off X amount or percentage because of the market that we're in at the moment. It does very much come down to demand. I think that will probably ease as we come out of this lockdown. Let's face it, I don't envy commercial valuers at the moment. There's certainly an element of guesswork is the wrong word, but there's certain elements of nervousness just generally, as we alluded to. What will the future look like for the high street? Are people going to need office blocks? Are these going to be converted into residential? What will happen? So there is naturally an element of that being built into the reports, because let's have it right, the valuers are there for the lender's interest to make sure that it's suitable security to lend on. However, having said all of that, it's all about drilling down into the methodology of the valuation, as we alluded to. So commercial property, you're looking at long form valuations or red book valuations, as they're referred to. And if you've ever seen one of those reports, they're anything from sort of 25 to 95 pages long. It will comment on the macro environment, the micro environment they're in, but crucially, it will provide you a number of different valuations based on assumptions. So there'll be assumptions around the market value, which is the existing leases. There'll be vacant possession value, which Shawbrook tend to lend off, which will be the property without the benefit of the leases. And then there'll be 180-day, 90-day assumptions around planning that could be achieved for the property. So again, that's where the expertise of Crystal will come in, because they'll be able to pick that apart, look at the valuation report, and then find a suitable lender. So my advice on that question would be, the client comes to you and says the property is worth X or Y, just sort of ask that further question. How has that valuation been arrived at? Has the property been subject to a marketing campaign if it's purchased? If it's a remortgage, is there a previous valuation floating around that maybe Crystal could look at and look into, and then they can select a suitable lender on that basis?
Thank you for that. Simon, anything to add to Matt's answer?
More than that, Matt has absolutely hit that nail on the head. It's definitely about understanding the valuation method, and you guys at Crystal know exactly what you're doing in regards to this. If there is a previous valuation, that's a great tip from Matt, especially on your remortgages. If there is a previous value around, get that. They are really in depth, the commercial valuations, and they will. It is something that you guys at Crystal and Joe and his team will happily look at for you. And Matt's explained it absolutely perfectly.
Yeah, it's just absolutely understanding, the goodwill element, as the guys are alluding to here. A lot of people buy commercial property and the vendor tries to sell with a bit of goodwill because of the reputation in the area and things. So it's just trying to strip that out. And I think, for me, I think one of the big misses and one of the things we always try and encourage our brokers to get their applicants to do is get the applicant out on site with them, the valuers there, because they're the ones that've got the vision and they're taking this property on a journey, be it they already own it or they're buying it. So explain that to the valuer when you're there. Don't leave that to some agent or the vendor to pick up on. And that's where I think some of these things fall down. It's just the communication piece, and that starts right with you guys when you get your applicant and he gives you an EV. It's not like the residential mortgage market. Drill into where that's come from. And try and support that with facts, not fiction.
I think you're dead. Yeah, sorry, Chris. I think you're dead right, Joe. And especially we touched on commercial bridging earlier as well. So if there is a vision for the property, if there are works to be carried out once the property is purchased and it's on a bridge, definitely be upfront about this. Don't have that valuation report returned where a valuer is saying, Mr. Lender, you need to, Shawbrook, you need to investigate this and this and this point. If your solicitor's already done that work, if it regards planning or enforcement notices or any manner of things, give all that information up front, and then the lender, the valuer, and you guys at Crystal can make a full assessment of the case. Really crucial points.
Some excellent tips in there, thank you. And there is more variance, I suppose, between approaches on commercial than there is on the typical residential valuation. So it is important that whole picture is put together and you can make the best possible case to the valuer for what you believe that property is worth. Brilliant. So thank you for that. We're running short on time at the moment, so I'll just divert straight to the last question we've had here. So the typical way we wrap this up is to look at your favourite deal to fund. It says this year, we'll look at the last couple of months or so. So Matt, do you want to start us off with this one?
So it was actually just at the end of last year, but relevant to this year. I'll tell you what the reason why. It was actually 6 mixed commercial properties. We were looking to remortgage and refinance and release some equity, because the client had got wind that a friend of his, who was also a landlord, was looking to retire and sell off his commercial portfolio. So the idea was we raised against 6 commercial properties in the Midlands, different tenants, different leases, different valuations. Even the highest was sort of up at 600 and the lowest down at 125. So a real mixed bag of assets for us to get our sort of teeth stuck into. He's now raised the money, successfully purchased that portfolio. And the reason it's one of my favourites, because he's come back to us this week and said he wants to remortgage against that now to go again. We've got that repeat client, that repeat journey, and really starting to build a nice relationship and go on that journey with that client.
Excellent. Nice example there. And again, I touched on earlier, we've done a couple of deals like that with you for the same borrowers, where they're building their portfolio, they're building their experience, they're building a relationship. And it does make that follow-up deal much more straightforward, because you've got a full understanding of what the client wants to do. You know their business model. Yeah,
and it's continuity. I was having the conversation with the specific underwriter that did the last deal, and it's, oh right, yeah, Mr. X is back. He's cracking on, and yeah, he said he was going to do that. So look, it's that continuity and that consistency. So as I say, it should lead to a nice smooth experience, and we go again.
Brilliant. Thank you for that. Simon, what's your favourite deal over the last few months?
It's actually one for Crystal. I personally love a deal where a broker starts with, this probably isn't one for you, or I'm struggling to place a case. My ears prick up and see that as a challenge. And I know after this, I'm going to get loads of calls that are going to start like that, but it is what it is. One very recent one was via Crystal, buying a first semi-commercial property. It was actually their first investment property, full stop. And I'd been previously chatting with Sam at Crystal about looking outside of the box and if a case made sense. So obviously light bulb moment with this one, where client technically didn't fit the usual criteria, but client had actually been working as a letting agent for the last 9 to 10 years, knew the market, actually helped with the parents' portfolio. We present that to an underwriter who's happy with the exception. Deal was submitted, it was valued, it was offered, and just completion to go. So it's a great example of working and looking outside of the box, and the criteria really didn't need to be there because the deal just made sense. For me, set a challenge to the attendees. You know, those cases that are on your desk and you can't place, you think that won't go anywhere, speak to Joe and the team, or internal, speak with Matt and myself, and you'd be surprised what can be done. You know, bring them on. We all love a challenge, and we're all happy to try and get the funding for the clients.
One of the things I love most about your sector is that challenge. I used to work in a residential role prior to coming into Crystal many moons ago, and it was a very rigid approach to things. It was tick box. You know, if you can tick 49 out of 50 boxes, the client still can't have the money because there's that one missing. So again, my first couple of weeks at Crystal were, I don't think we can do this, but, and it's amazing the level of control, and then that sense of achievement that you get off the back of it when you've actually made something happen for the customers. It really builds that relationship and drives it forward.
Without a doubt. I mean, if you're looking at the criteria on a website, technically a lot of deals just don't fit in the box. But with the likes of your guys, we've spoken to them on multiple occasions. We hold webinars. We every time we tack and move something different, we're making sure that everybody's up to date with, look, this is what a deal may look like, but if it's a little bit outside of it, let's think about asset, let's think about experience, let's think about individual, and let's try and do a deal. So, you know, your guys are brilliant at looking at those opportunities. It was definitely a pat on the back to Sam from the conversation we'd had the week before.
To show the strength of that relationship as well, doesn't it? Having the relationships with the right people, that you know what you can ask for and what you can't, and structuring the deals from there. So, great example there, Simon. Thank you. And Joe, what's been your favourite deal you've seen recently?
I mean, if it's all time, I mean, you know, how long have we got? I mean, we've done everything from helipads to micro pig, B&Bs. You know, there's some seriously interesting deals. I just think recently, you know, I love this whole pivot and prosper idea, and you know, we've got a seasoned commercial investor we work with via a really good Southeast-based broker, and you know, this guy's pivoted, and he's identified that there's an opportunity with pubs in secondary retail locations. So he's been over the last 12 months been buying these pubs, converting them into, you know, change of use. So he's been using a bridge to acquire them, getting the change of use to convert them into retail or semi-com, predominantly. Getting the decent tenants in there. You know, and we're on a 5-year plan with that guy to moving back towards High Street on these newly acquired and refurbished former pub, now known as, you know, 2 shops and 8 flats above. And, you know, I think we've done about 8 million quid with this guy so far this year. So, you know, there's just pivot and prosper for me is what I find it fascinating. You know, that sort of challenge that you're on about earlier, Chris. It's great supporting these entrepreneurs and helping them on their way.
Yeah, brilliant example. And it's great for the brokers as well, because that one conversation, that one transaction can turn into multiple for the same thing. So that example there, bridge to purchase, possibly a refurb bridge to do the work, and then a term loan to take out afterwards. So there's 3 earns there on the back of one deal. Which is,
and it's a great point, because I think that conversation started from the sales deck where they'd got someone called me up and said, you know, got a guy that wants to buy a pub in the middle of a pandemic. And I was like, oh my word, how do we help out with this one? And then just, you know, picking up, having a client meet, you know, we've picked up a decent flow of business from him.
Yeah, brilliant. Well, that brings us to the end. We've gone a little bit over time on there as well. Thanks to all the questions coming in. So thank you to everyone for sending those. Gentlemen, you've been amazing. Thank you for your experience and for the insight that you've shared with us today. Hopefully that's been really useful to everyone watching, and you know, fully expected to be some deals coming across to you off the back of it. So thanks, gents.
Great. Thanks, Chris. Thanks, Chris, mate. Thanks, guys.
Thank you.
So for everyone watching, thank you for your time. The CPD certificates will be out shortly. Our contact details are obviously there. Please feel free to reach out with any deals that you've got on the back of this or any of our other sectors, bridging, development, buy-to-let, wherever it might be. So thank you to everyone for attending. And lastly, stay busy, stay safe, and hopefully see you all next time. Thank you.